Luxury home builder Toll Brothers pre-announcing its third quarter home building revenue. CNBC's Diana Olick on the home front has the details. Hi, Diana.
Hi, Dylan. So how do you look at an earnings forecast where the company's revenues are down 34% and still say it's a good report? Well, welcome to today's housing market. Toll Brothers won't give earnings guidance, but preliminary third quarter results show revenue fell 34%, actually a bit better than the street predicted. Net contracts fell 35%, but cancellation eased a bit from 24 to 19%.
From an order perspective, they were ahead of where we were. From a unit order perspective, it was a little bit better. I mean, obviously the housing market continues to deteriorate. Things are still pretty bad. But, you know, on a relative basis, certainly a little bit, certainly some positives that we took away from the release.
Now, the big positive in the report is cash. At the end of the third quarter, Toll had a cash position of about $1.5 billion, combined with about $1.3 billion available under its bank credit facility. Toll estimates it will have between $100 and $200 million for land and option contract write-downs, but that's actually comparatively low given what we've seen from some of the other builders.
The reasons that we really like Toll are, you know, one is the liquidity, and that continued to improve. Two, we think being on the high end, a lot of their main competition, small private builders, are going to face, you know, are going to be more exposed to capital constraints.
Now, interesting, Citigroup initiated coverage of the builders today. Analyst Josh Levin is starting only Toll and Pulte at a buy. All the others assigned hold ratings. The buy is all based on that liquidity position. Maria?
All right, Diana, thanks very much. We've boiled down the numbers now and the outlook. And a CNBC exclusive joining us from Toll Brothers headquarters in Horsham, Pennsylvania, CEO Robert Toll joining us. Mr. Toll, good to have you back on the program.
Nice to be here.
Can you tell me what the quarter indicated for you in terms of this broad, deep slowdown in housing that we're experiencing?
It indicated a lot of hard work, a lot of serious management time, taking on maintaining employee base in line with production, which means you've got to make sure that you're operating lean. It's a shame for those that have been with you for a long time, but it's an important job that management's got to do.
Well, revenue, backlog, net signed contracts were all down, but you did say that you saw some encouraging signs. Tell me what the quarter indicated for you in terms of where we are in the housing cycle slowdown.
It doesn't feel good, but it's not getting any worse. Our traffic is at all-time lows, but it's been consistently in the numbers for about the last 3 quarters. So that gives us something to feel good about if we're trying to dream of things to feel good about. We feel good that the cancellations have finally come in a little bit. In the past 8 quarters, we only had one other quarter as good as this for cancellations. That being said, cancellations are still way up there compared to the norm, but anything that makes you better makes you feel good.
Mm-hmm. So the cancellations, the lowest you've seen in more than 2 years. That's a positive.
That's right.
In terms of this cycle. As far as going into 2009, is this not? I mean, this is pretty definite that we're going to see the slowdown go into 2009, correct?
No, I don't think anything's definite that you're going to see continue. I wouldn't bet against that. Everybody thinks that it's going to continue to slow down, but when we hold specials, which are not really specials, but just some reconfigured incentives grouped to make it look as though something special is being given away. And when we work the phones, have the VPs and the project managers as well as the salespeople get on the phone and invite people, come back, think about it again. We've got a special this weekend. We can typically sell a multiple of 2 or even 3 sometimes in the ordinary deposit take that we would get without the special incentives and the special phone-a-thon. And that indicates to me that there's a pretty substantial pent-up demand that's been building. It's been building for about 2 3/4 years now. And sooner or later, that pent-up demand will slowly go over the dam that's holding back housing sales. At first, it'll be a trickle, and then it'll be more and more. And that's traditionally how we get out of these housing doldrums. This time, it's almost a housing depression, or perhaps it even is. And so we can't say for certain that 2009 won't be better than it is now.
Mm-hmm. We had a number of executives in your industry on just in the last couple of weeks, all of whom predicted that prices have not bottomed out yet in terms of your average selling home there. What do you think? How much further?
I'm sorry to hear that.
Yeah. Do you think prices will fall?
Well, I don't think prices are going to fall much more for home builders. I don't see how they could, because when you're at a point where you're selling into your ground value for less than you think the ground is worth, then why would you build a home? You might as well sit on the lot, unless you can't afford to carry it and you've got a cash flow problem. In that case, you're going to see housing prices continue to go down. I think you'll see housing prices come down in the used home market. The difference between that market and ours is we've got about 15 CEOs who have taken prices down pretty reasonably in the last 2 years. You've got about 4 million CEOs in the used home market that have perhaps only lowered their prices 10%. They've probably got a ways to go. So that may be what's being talked about with house price declines as opposed to the new home market.
What would you say the inventory looks like? I mean, you've got to be taking some pretty sharp discounts on to get inventories moving again, right?
We pared our inventory back pretty severely so that we have onesie-twosies per community in the single-family product. So we don't have much inventory, and I would think most of the other home builders by now have gotten themselves into that shape, though if what you say is so, perhaps I'm overestimating what the brothers have.
Well, let me ask you this real quick, Mr. Toll. As far as the plan coming out of Treasury and the housing bill signed, do you think that brought any confidence back to the market? Is that enough? Do you see anything else that can be done on a regulatory end?
Well, look, bills this complicated certainly take the art of compromise, which is politics, to the nth degree. I wouldn't have done it this way. I would have gone back to what was done successfully in '75. Gerald Ford, president, Democratic Congress. They passed a $2,000 new house credit. If you bought a new home, you got $2,000. That today would be equivalent to about $15,000. And I think if they had done that, they would have restored more confidence in the market than by offering $300 billion to FHA to help reset mortgages. I don't think we addressed it as we should, but we'll take what we've got. Who knows? It may be enough to turn it around. We'll have to wait and see.
All right. We will leave it there. Mr. Toll, good to have you on the program. Thanks very much.
Thanks.
We'll see you soon. Robert Toll joining us.